So imagine for a moment that you got a 13th check, or you have some disposable income that you can spend and invest. The question is, where do I invest that money? That's why we have Warren Wilkinson with us once again in studio. Warren, great to have you.
Thanks, Mike.
As always.
Thank you. Thanks for having me.
They talk about the four horsemen to avoid in investing. Who are these four horsemen? And why do we avoid them?
I think it's probably the biggest reason why the United States caused the entire recession around the globe for one of the horsemen, and that was
greed, no doubt.
Greed, absolutely. Okay. One of the biggest reasons why people get into trouble is that there's greed involved. I don't have it, so we want to push it until we get to have it, and then you create that snowball effect. So greed is the first horseman. Then there's fear. Obviously, what drives markets to a large extent is fear. You better buy now, otherwise you're going to lose out. And there was recently a case where a company had drawn in investors to buy bogus shares. And again, another scheme that had put a lot of people into financial trouble. So fear is the second horseman. Ignorance. Don't think that you can do better than a stockbroker that has spent 100 million rand on research just to be able to fund the type of decisions they're able to make. So don't be ignorant. Rather leave the money-making process to professionals who can watch those screens on a day-to-day, hour-by-hour moment. And then the last one is hope. You make a big mistake, even if you're doing some CFD trading or some other trade, is to adjust your strategy based on hope. Look at the fundamentals, look at the technical analysis, and
take the emotion out of it.
Absolutely,
in other words.
Absolutely.
Okay. So you talk about those four horsemen and how to avoid them, and avoiding them, you can do that by going to someone that's a qualified financial planner.
Absolutely.
Right? But how do I guarantee, or how am I sure that he's a good financial planner? Do I look at his track record? Do I look at his skill set?
Yes.
I mean, help me find a good guy.
Yeah. I think the financial planner is going to be able to link your risk profile, who you are as an investor, whether you're in the retirement phase of your life or pre-retirement, or you're a young yuppie starting out and cash and life's good. And then link you with the right asset manager with the right solution to be able to obviously provide for those needs. And then the skill set that those asset managers bring to the table is key. If, past performances is never a good indication of what it's going to do in the future. So be careful of those type of, well, look what it's done in the last year, because that's not indicative of what it'll do in the future. You'd rather want to go deeper with the due diligence to say, well, what have they done consistently well over a recessionary period? So if they've managed to protect your money in a time where people have lost 30, 40, 60% of their money through a recession, why have they done it, and what has caused them to do so well during a downturn? And that, I think, is key. Your skill set is key.
I can't believe there are too many of those around, so look out for them and look closely.
Yes,
due diligence. Yeah. When it comes to investing, how important is liquidity? We talk about cash being king.
Yes.
You don't want to invest every last cent you have in a 5-year plan, obviously.
Yes. I think cash, there are plenty of reasons why people would want to have money in cash, and time is too short for us to deal with all of them. But the three main ones I would bring up is, first of all, it gives you bargaining power. So if you've got some money in cash, it gives you an opportunity to look for buying opportunities when they come around. So cash is good. Even in a normal portfolio, you would normally want to have a little bit of cash to be able to buy into those opportunities. The second one is to fund income, because you don't want to be selling units or selling off shares to be able to fund your income. You want to have dividend income streams, and you want to have your cash portfolio at a level where you can secure a year or two's worth of income and nothing more. The rest should all be invested in growth assets, well diversified. And then the last one is, if you've managed to land an inheritance, or you've won the lotto, and you don't know what to do, and you're still looking at all your opportunities, and it would be remiss of anybody to run into the first opportunity, but to park that in a good yielding money market investment or account that is going to give you some return while you wait, but certainly don't wait forever to get that money to work for you.
So that all rests on the head of someone that is giving great advice.
Yes, absolutely.
Now, surely there must be a cost for that. You talked about people trying to make decisions outside of a broker because they're trying to get lucky. But they're doing that to avoid the cost of investing.
Yes.
What are the opportunity costs?
Well, I think you touched on the real reason, and that is risk. If you are able, or if you're wanting to go out there, you set up your own share portfolio, you're trying to take that risk on yourself. as opposed to transferring that risk over to a professional who's got the right skill set to be able to generate the kind of returns or the growth that you're looking for. I think the risk by and large, that risks that one faces then is you've got to look at costs. You've got to validate that you're paying an advisor fee or an ongoing advisor fee. You're paying platform fees. You're paying an asset management fee and administration costs. And then there's penalties, or not penalties, there's performance penalties that you would pay if you go ahead of a benchmark. So you've got to factor all of those costs in relating to the type of risk that you would take if you had to do it yourself. But there are ways to mitigate that, because again, if those people are bringing the right value to the table, then you don't mind paying the kind of fees that are levied.
They're worth every cent.
Absolutely.
Warren, thanks again. It just seems to go so quickly, these nuggets of advice that you give. But again, that's Insight is all about wealth management and planning. And once again, it comes down to that very bare basic fact: get good, solid, reliable advice. And then you can't go wrong in a good market.